Nifty and the mid-cap index hit record highs as the market opens on a strong note. Metals and financials lead gains, FMCG and realty lag.
HCL Tech surges after signing a 7.5-year, $278 million deal with Germany's largest corporate bank. Brokerage Morgan Stanley also issues an overweight rating on the stock.
Tube Investments and TI Mobility complete formalities to raise about 160 crore rupees in TI Mobility, completing its targeted 3,000 crore rupee fundraise. The stock up by about 3%.
Go Digit Insurance net premium earned rises 42% on a year-on-year basis, while net profit doubles in the fourth quarter. The stock surges close to around 3%.
Dollar Industries eyes 50% sales growth in South India in FY25. Also hires actor Mahesh Babu as brand ambassador. The stock rallies around 3%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. And as you can see to the top of the screen, it's all green. The Nifty is making a fresh all-time high. The Nifty Bank has conquered that 50,000 odd mark, and the breadth of the markets looking extremely good. So it's a good start. Let's see where we wind up in today's trading session. You've got a big Q Mangalam post-close as well.
Boom, boom, boom. That's exactly what's happening in the markets, Nigel, you know. And a lot of these PSUs are back in action. We have Container Corp, which has moved higher. We've been looking at SCI all through the morning. We have SCI Land Assets doing well. A bunch of these stocks, Hindustan Aeronautics as well, now moved to the high point of trade. They were wobbly some part of last week, then saw a bit of a recovery. Maybe continuity is something that the street eyes, and maybe continuity of policy is something that the street is backing as well. So we have a bunch of stocks which are buzzing around. Let's get in Soni Patnaik for a quick technical check on the market along with some of the stock ideas that she has. Soni.
And good morning, Mangalam. Nigel, thank you for having me on the show. So I think Nifty, of course, it's almost about to cross that resistance of 23,420, above which you can see it heading towards 23,500 plus levels. And as of now, the support was 23,200, but then today we can see a lot of open interest additions happening in 23,300 put option as well, which is indicating that this is going to be the intraday support for today. So I think as long as it's getting defended, the resistance is about to break, and you can see higher levels towards 23,500 odd levels. For Bank Nifty, of course, it has crossed the resistance of 50,100 level. There's a minor resistance of 50,300 in Bank Nifty spot. Any move above that, you can see it heading towards 5,700, and there's a lot of high chances that it can cross the resistance. And there's a lot of fresh open interest additions happening in both the indices, and they have a lot of even support from the heavyweights such as SBI, HDFC, Reliance, all contributing to the indices to break the resistance and move above.
Okay, all right. What about individual stocks, Soni? What are you tracking?
So the first would be from the banking space, which is AU Bank. It has given a fresh breakout on intraday daily charts today and giving quite fresh good positions. So in futures, one can buy at current level, keeping a stop loss of 655 and a target of 680, 685 can be seen. So these are the future levels. And the second stock pick would be in MCX. Again, MCX has been adding the positions of open interest for the past 3 days very slowly. So there's a good move coming about in MCX, which can head towards 3,900, 3,950. So keeping a stop loss of 3,680 and a target of 3,900 can be seen in MCX.
All right, Soni, thank you for joining in, giving us your views on the indices as well as individual stocks. MCX as well as AU Small Finance are her buy ideas. Let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Today we have Lekha Badlani Jamnani joining in.
We're positive on Global Health Limited as we think the recent correction of around 14% in the last 1 month offers great value. Now its operating performance and earnings outlook remain healthy. In the recent Q4 results, our revenues were up 15% YOY, driven by higher patient volumes and improved ARPOB. Now, the company continues to add beds in its developing hospitals of Lucknow and Patna. Additionally, Noida, South Delhi and Indore are the new focus area for capacity expansion. Now, the hospital in Noida is expected to commence operation with 300 beds in Q4 FY25 or by Q1 FY26. The South Delhi project, which is in alliance with the DLF, and the Indore projects are progressing well with the regulatory approvals. Overall, Medanta plans to incur a capex of around 1,000 to 1,200 crore over the next 2 to 3 years for these projects. Besides, the company is engaged in identifying more opportunities in Uttar Pradesh to widen its coverage beyond Lucknow and Noida. Medanta is also extending its services outside the hospital vertical. The pharmacy business, Medanta Labs, and home care services all continue to grow well. The company has a healthy net cash position of around 700 crore to support all the expansion plans. At around 27 times FY26 estimated EV/EBITDA, the stock is now trading at reasonable valuation and can be accumulated on market weakness. Also note, any pricing related regulatory changes or delays in project execution could act as downside risks.
Thanks a lot for that, Lekha. Well, let's move on then. We spoke to Mr. Rhythm Desai, the Managing Director and Chief Equity Strategist India at Morgan Stanley, from the sidelines of their investment forum. Let's listen in to excerpts from that conversation as we slip into that break.
EM as an asset class, especially because of China, is on the back foot. So it's actually the least preferred equity market in our global pecking order. And I think that's also reflected in the flows. So if EM as a whole is not receiving inflow, it is hard for India to receive inflow. When we do the calculations, we find out that fund managers with GEMS mandate, global emerging market mandates, are slightly underweight India. So ideally they should have been overweight because India is persistently a big outperformer in an EM context. But obviously, they have been worried about valuations and therefore they've been waiting for the market to correct. And the market is not obliging, so they remain underweight. India's weight in EM has gone up significantly in the last 3 years. So, we were at around 8% pre-COVID. We're now 17%. We are in a market where earnings are likely compounding at 20% for the next 4 or 5 years, and that makes the market cheap. I see some value in industrials, not all across the board. Industrials, I think, is probably the more tricky sector. I see a lot of value in the market. I see value in many places. Just to highlight a few, I see that in private banks. I think we are in a very sweet cycle. I think we have to be very selective in healthcare. Value is not there across the board. See, the intensity of oil to GDP has halved in the last 6-7 years. So we are less sensitive to oil. But if oil went up $30-40 all of a sudden, then it would create near-term pain. But otherwise, I think oil is a lesser concern for us than in the past.
Market continues to do well. A lot of stocks from the broader markets. We have Ramakrishna Forgings, which has now moved to the high point of trade. A decent gain is what we've seen. In fact, this month itself, the stock is up around 11%. Dish TV, surprisingly, surging up around 6%. So a lot of these media stocks doing well. Healthcare Global is the other one which has seen a bit of a spike as well. And from a wellness space, one of the stocks which has been forgotten completely is Kaya, which is up around 15%, and huge volumes piling up on that one as well. So we'll keep an eye out on all these buzzers from the broader markets. Typically, bull markets, we have a lot of stocks moving around and moving with a fair amount of gusto. But some of them have news backing them as well, and one of them is TVS Supply. Why is that? Because they've signed a new agreement with Germany's Daimler Truck Southeast Asia Private Limited. So, of course, it's part of the Daimler Group, but this one comes in from their Southeast Asia division. The deal value is undisclosed, but this is definitely in the right direction in which the company does intend to go. When they joined us post their earnings, they did say that they are targeting double-digit growth in their integrated supply chain business in volumes in FY25, and there's a step in that direction. Additionally, they're also looking at nearly 10 to 12% of their business coming in from new businesses. So that's another, reaffirmation of this deal. And the third part is they see margin improvement on a sequential basis. So new business coming in, growth coming in, and hopefully at a better margin than what it was earlier is something that the street is responding to with a 6% gain, Nigel.
Okay, all right. Mangalam, thanks a lot for that. Well, the other one that was doing quite well was Go Digit. Yash joins us to run us through a quick analysis on that one. Yash?
Well, Nigel, it's been a good quarter for Go Digit General Insurance. What has essentially happened for the company in this quarter is that the top line growth, the premium growth has been very strong, and not just on an aggregate level, but all the businesses that they do under General Insurance, the book has grown very well. Underwriting performance has not been so well. Underwriting loss has increased, and that is primarily because the expenditure towards commission and other expenses has increased substantially in this particular quarter. Just to take you through some numbers, the net earned premium for the company in the fourth quarter, that has gained by about 42%. But do remember, as I said, the expenses have been higher, so net commission in this quarter was up 9 times. Total expenses were up 40 times, and it was largely because of that underwriting loss, which is net earned premium minus total expenses. That loss increased about 21%. Operating profit, though, which is your total income minus total expenses, that came at about 494 crore rupees versus a loss of 9 crore rupees. Net profit also saw a jump of more than 100%. As far as their portfolios are concerned, the loss ratio trend in the motor portfolio, which is 60% of the book, has been trending lower. So from about 74% of loss ratio in FY22, it's come down to 66% in FY24. That is motor OD. Motor TP is also reduced from about 81% in FY24 to 60%, in this particular financial year. As far as health, which is about 20% is concerned, there the loss ratios have increased from about 49% in FY22 to 94% in FY24. The stock, as you know, recently got listed on the exchanges. The IPO price was 272 rupees. It listed at 286 rupees. It's about 18% higher to its listing price and 24% higher to its IPO price, and building on those particular gains in today's trading session.
All right, we take that point, Yash. Thank you for that. But the market's continuing to move higher. The big boys have woken up. We spoke about HDFC Bank. Don't lose sight of what Reliance is doing. Reliance too has moved to the high point of trade and taking the Nifty yet again to another fresh record high, surpassing the highs of the morning as well. So a fresh high on the frontline indices led by the frontline batters as well. We have HDFC Bank, Reliance. Giving it company on the way up is also SBI, which too has moved higher. The Nifty Bank now comfortably above that 50,000 mark with a 200-point gain over that 50,000 itself. Speaking about banks, Federal Bank has actually shortlisted 3 candidates for the post of the MD and CEO of the bank. They've sent the names to the RBI. Abhishek Kothari joins in with the details. There has been a mild spike in the stock. Abhishek, tell us more.
Well, sources do tell CNBC-TV18 that 3 names have been submitted to RBI for the post of MD and CEO. Now, my source that I spoke to said that the names have gone about 10 to 15 days back. We did this exclusive in February that KVS Manian has been shortlisted, and his name appears to be in the list and as the MD and CEO of Federal Bank going ahead. So he is ex-deputy MD at Kotak Mahindra Bank, so is likely to be the external candidate. And as we reported in Feb that there will be 2 internal candidates, Shalini Warrior, that is the executive director, and Harsh Dugar is the executive director. These 2 internal names have been sent to RBI as well for the post of MD and CEO. Just to alert our viewers again, in Feb we had reported that KVS Manian would be the front running to the post of MD and CEO of Federal Bank. And Federal Bank, we wrote to them, but they have not yet responded to CNBC-TV18 story. Back to you.
Okay, all right. Abhishek, thanks a lot for that. Joining us and giving us a quick update. As we speak, the stock is gaining some momentum, moving to the high point of the day on the back of that update that's coming in there from Abhishek. Pull up the intraday chart. It was up close to 100%. It seeked up a little bit now, currently moving to around 170 rupees. Well, time to slip into a short break. You come back. We'll continue our focus on markets and stock-specific action.
All guns blazing for the market. Bank of Baroda moving well. Bank of, RBL Bank is doing well as well. So we have a lot of these banks and financials doing well. We spoke with the management of Manappuram Finance earlier today. But look at Muthoot Finance. That too has moved higher. In fact, it's up around 2%. And from the lows, it too has seen a bit of recovery. So Muthoot Finance is the one which moves higher. Financials and IT, both of them doing well in today's trading session, coupled with Reliance. And the result is a 165-point healthy gain on the index after a big move that it's seen all of last week as well, despite the volatility. The Fed's two-day meeting now will be the next big event to watch out for from a global market standpoint. CNBC's latest Fed survey actually shows that the US economy is gradually weakening. Steve Leisman joins in with details. If that were the case, then perhaps that could also spell some respite from higher rates.
CNBC Fed survey growing a bit more hawkish since the last meeting, whittling down the probabilities for rate cuts this year and extending how long the Fed is expected to be reducing its balance sheet. Here are the numbers: 46% probability for September, 62% for December. Both are down from the May survey. Both are a bit below market pricing as well. 5.01, that's the average year-end funds rate. That is up a few points. And March 2025, that's when the Fed's expected to end quantitative tightening. In the prior survey, it was January 2025. Peter Bookvar, Chief Investment Officer from Bleakley Financial Group, he writes in with the survey: nothing in the recent data we've seen should give Powell confidence that it's time to cut rates, and I don't think he's going to be influenced by other central bankers that have already cut. More on that in just a second. Okay, so here's the outlook for the funds rate. 5.4 is the current one, goes down to 5 end of this year, 4.1 next year still, with the long run 3.3. So you can see the Fed expected to be above the neutral rate for quite some time. At the beginning of the year, the outlook for 2025 was about 50 basis points lower. Even while its outlook has turned more hawkish, the group of 29 strategists, economists, and fund managers has more concerns from the dovish side. Take a look here. What's the most likely scenario? The Fed cuts too late, say 66% of our respondents. 21% say it cuts too soon. That's the most likely scenario. And just 14% think the Fed gets it just right. Mike England, chief economist at Action Economics, he writes in, says, there are growing signs U.S. economic growth is beginning to weaken, perhaps as supply shortages across industries are finally dissipating, providing more two-sided risks to the economy. Still, respondents don't think the Fed should cut rates just because the real funds rate has gotten more restrictive with the fall in inflation. But they think the ECB did the right thing by cutting interest rates for just that reason. And of course, we have that CPI number tomorrow morning, which could actually influence the outcome of the meeting tomorrow.
Well, let's also listen to some opinion coming in from the former Atlanta Fed President, Dennis Lockhart, as Wall Street awaits the Federal Reserve's decision.
Yeah, I just don't think what the other central banks are doing is going to be that much of a consideration at the table. Well, if you want to predict the path of policy, I think we kind of have to put ourselves into the head of Jay Powell and the committee. And they believe that monetary policy and high rates eventually will achieve the objective. There's been, I think, no abandonment of that conviction. And so I think they will continue to use the tool they have, which is the level of the interest rate, to try to slow the economy and bring inflation down.
All right, that's about the U.S. economy, U.S. markets. No problems here. Near 200-point gain. When we started the show, it was around 150 points, and now it's moved higher. And hopefully it moves only higher from here on. But obviously, we will have to keep in mind it is important cues that will play out in the second half of trade. So up until then, from Nigel and me, the entire team, thank you for watching Chartbusters.